Testing one, two, three. You're all very welcome to see the trends on the 12th of January to 2020. Without further ado, let's go ahead and share the charts. We'll start with the NASDAQ, the top 100 technology companies. And you can see despite all the tension in Iran and between the US, the market seems to continue on this little mini uptrend that's going on at the moment. What we see, obviously, the big picture, we see that it could easily pull back to 8,000, would be very doable. But what's happening right now is there's row one, row two, and row three. So even next week it could come down to here. And the third Friday is next week as well. So that's going to put a bit of pressure on all 100 of the NASDAQ stocks to pull back. That's the NASDAQ. We'll take a look at the Dow next, the top 30 companies by market capitalization. Again, we're seeing exactly the same thing, that it would be perfectly normal and natural at some stage in the future for the Dow Jones to pull back to around about 27,000. However, it's doing this little mini trend up here. So you can probably expect a little bit of a pullback with all 30 companies on the Dow being part of having options. The next one we take a look is the S&P 500, and again, all 500 companies trade options. Again, if you stand back and take a look at the big picture, that at some stage it will be perfectly natural and normal for the S&P 500 to pull back to around about 3,000. And again, there's a little bit of a mini trend going on here, so easy could pull back here just in the week ahead. Last thing we'll take a look when it comes to the overall market is we'll take a look at the NASDAQ. The VIX. The VIX is a measure of the volatility of options in the US market. And again, we can see just as the market has done a little bit of growth, then the VIX has returned back to support. The VIX may trade sideways for a little bit, and then if the market does decide to pull back, you can see the VIX doing 3 rolls up, and then that would be row one, row two, and row three. And what's great about the VIX is that it gives you a strong indication when the pullback in the market is finished. So when you see all of the overall market back down at support and you see the VIX back up around about mid-20s, then it's a good sign that historically that seems to be a turning point for the market to go back up again. So again, we don't trade the overall market, but we're interested in knowing about it so that when there is a pullback in the market, some of those pullbacks I just showed you could be 10% or even 15% pullback. And as you all know, the bad news sells, and it will be all over the radio and the news when there is a 10% or 15% pullback. But you guys heard about it now, you know it's coming, so you're not surprised when it does come. So all we're interested in is the individual companies that we have on our watch list that we're interested in making money on. And ABB is now officially back down at its 20-day moving average, so that's where your protection needs to be. You are getting plenty of warning signs here that it's going to drop. You've got many days now with hidden weakness in your MACD bars. Your RSI is crossed below the 70% line about 5 days ago, and the stochastic is crossed below the 80% line about 4 or 5 days ago. So if it can't stay above the 20-day moving average, then it's probably going to pull back to here. So the way you protect your profit, if you happen to buy it at 18 or 19 and it's now up around about 24, all you simply do is you put in a contingent order that says contingent upon it dropping below the 20-day moving average. You might pick the low of Friday, which if we just clear away the drawings here, we'll be able to see. The low on Friday was 23.95, so that could be your protection. So it's closed at 23.97, but it's hit a low of 23.95. So that's how you would actually place the trade. And so for those of you who may not be familiar with how to do that, I'll just give you a quick demonstration of how to do that. We'll just bring up we'll do a new share here so you can see it. So as we're going to go through all the stocks tonight, because the overall market is at high point, is at resistance, there's going to be a lot of individual stocks that are at resistance. And so what you can do is you can simply put in an order that says contingent upon a share going below a certain point. Let's put in a call option. So say, for example, of FCX here, you would go option trade. And what's always handy is to have an actual option trade sitting on your tab here. So you can add in a tab, put in option trade, and then go to your widget and go down to option ticket. So say in the case of FCX, you might say FCX, or no, let's talk about ABB specifically. ABB, if you had it, you'd say I'd sell, and because it looks like ABB can drop back down to 20, you would sell to open. And let's say you give it maybe till March, plenty of time to drop. And in the money $20 call option. And so you can see the call option, you're getting $4. So instead of you watching your share price drop $4, you can collect the $4 now. And then you would leave it at market, you make a GTC, and you put in a placement condition. So the condition would be if ABB was to trade less than or equal to, and as we said, 93.95, that means it's making a lower low, it's penetrated below the 20-day moving average, and you can very proactively collect your $4, and you probably negotiate $4.10 maybe. So before the share drops $4, you get plus $4 here. So that's the way you can proactively. And the beauty about that is you preserve your account value and you preserve your buying power. And then when the market finishes falling and the VIX is back up around about 25, mid 20s, and your shares back down in support, then you can use that $4 cash to buy more shares. You can buy back the call option at support, use the profit to buy more shares, and then be ready to sell it again at the next high point. So that's, as we go through all the stocks here, just if you see things that are at resistance, you can protect them. And so if ABB were to continue to increase and to continue to go up and up and up, then you don't collect any rent. You only do it the day that it turns around and drops. Okay, so we'll go back to the charts. And the same principle applies to everything else we're looking at. AEO, again, is a retail stock that's at support. It's building a nice strong support around about 14. And if it were to go back up to the next resistance is around about 16 and maybe even around about 17 or 17 and a half. It all depends upon their results. So it's good to be one step ahead of the results. Next one we're taking is AES. Again, it is in a hyper mode. What do we mean by hyper mode? That normally it should be trading in this lane of traffic. This will be normal. So it's in hyper mode. So the first line of support for this one is going to be 19 or 1880. And if it falls below that, then down to around about 1750. So again, same story. When shares do well, they ride on top of the 10 and 20-day moving average. So you can put your support in your contingent order here, which is around about 1960. And so as long as it stays above the 20-day moving average, you can give it the space to grow. Next one we're going to take a look at now is we're going to take a look at ANF. Again, another stock that tends to do well in this next quarter based on the results. Again, you can see row 1, row 2, and row 3 hasn't happened yet. And if it does, it'll take you back up to around about 20, and then support is around about 16. At the moment, the indicators are bunched around about the middle here. So at the moment, it's going through a little bit of a sideways trend. But at some stage, it's going to want to go back up to 20 or back down to 16. Next one is ASNA. And again, it depends on ASNA's next earnings, how it reacts. But you can see here, this big jump up here is because it did 18 cents profit. Might have to revisit around about 6 before it can go again. But the next clear resistance, if it has good earnings, will be around about 10 10.50. So it's kind of done roll 1, roll 2, one more roll would take you back up to 10. BB is next. It looks like finally, after a long time, almost a 2-year downtrend. It started this downtrend back in January 2018. So it spent 2 years dropping. It's finally shown signs of breaking out of the downward trend. So you got the big rolls here, and then you've got more rolls here. So it built up a strong base here at 5, and it looks like now it wants to break up to the upside. And if it does, here's your next 3 targets to the upside. So over the next 6-9 months, you could see it back up around about $10. That is if it continues to do well and continues to stay in an upward trend. BBBY must have had earnings here. Let's just slide in here. Yeah, so this is something that the way it's recovered quickly here would suggest that there's an opportunity to participate in the closing of the gap. So if we close the gap from here, you can see it back up at 16. And again, it had done 3 rolls anyway. So even if there wasn't a gap down, it was probably going to gravitate back to previous lows. That's what shares tend to do after 3 rolls up. They gravitate back to previous lows before they can go again. That's BB. So again, the lesson is always when you get to the top of the 3rd roll, always either take your profit off the table or protect your profit. Next one is Buckle. Again, another retail stock that's going to, how it does depends upon the earnings or the results. It seems to have dropped below the mini support here. And I suppose because we're coming into 3rd Friday, its potential is to pull back to around about 23 will be doable for Buckle. Next one is CHK. CHK is very much dependent upon oil prices, and again with all of the unrest in between Iran and the US, is going to be pretty much dependent upon oil prices. If oil prices continue to go up, then you can see it. Definitely, there's a very strong support here at 130. That will be your new resistance, but it's very much dependent upon news. CHS, another retail stock, and we talked about this last week. It looks like it's done roll number 1, roll number 2, and roll number 3. If it does continue on up, could take CHS back up to around about 5.5. You've got a bit of strength building up here in the MACD bars, V for Victory and Stochastics, RSI. Next one is CNDT. CNDT is just continuing to trade sideways. It's done roll 1, roll 2, roll 3, looks like this to take it back up to 750. The indicators look very strong. Your RSI is down at 29, stochastics down at 25, and MACD bars in the right place for a turnaround. So another roll will take you from 5 back up to 750 for CNDT. Now CRUS is continuing to do well. It's based on Apple. Its biggest customer is Apple. So if Apple continues to do well, it will do well. However, there's a government wealth warning here. Many times in the past when we've seen a spike down like this, it may get back there again in the future. Short term, the support is around about 72 and then around about 60. Again, there's weakness in the MACD bars here. Upside down V for stochastics and RSI. Next one is Disca. Again, Disca is getting a little bit tired looking up here. You can see Disca easily pulling back to 30, 29.50 will be doable for Disca. Once you see it going below the 10 and 20, it can tend to begin a downward trend. And the long-term stochastics needs to get back down to below 20 before you would see any sign of strong support. Next one is Dick's Sporting Goods. Again, another retail stock. Again, it's in a little bit of a hyper mode. It's done 3 rolls here, so that might be the end of that uptrend. This might be the sign of some weakness, and if there is weakness, your definite immediate support is 42, which is the old resistance here. Strong resistance here, 42. Again, plenty of weakness in the MACD bars. Upside down V, stochastics RSI. ECA, another stock that's dependent upon oil prices and energy prices. Again, it's has technically started an uptrend now because it has, or has it? Let me see. Maybe that's an equal high. Yeah, maybe it's more like a sideways trend. It needs to break above this resistance before you could say it's in an uptrend. So maybe in a sideways trend here between 4 and 5. But buy at 4, sell at 5, you make 20%, or take 120 in the money income off the table, and you make a little bit more. Next one is Ericsson. Again, Ericsson is an interesting company. It potentially has the possibility of doing very well with the rollout of 3G technology. It is in a downward trend. A little bit more to go. It might find support here, the old support here, and the old resistance here at around about 830. Next one is FCX, and FCX is at a little bit of a high point, and you've already got plenty of warning that it could drop now. So if you're sitting on FCX and you're sitting on some profit, you've done 3 rolls up, and then you've done 3 mini rolls sideways, and you've already got plenty of weakness in the MACD bar, so don't be surprised if it pulls back to around about 11. FLR is next. FLR again is a stock that has the potential to do well. It's had a long-term support. There's a couple of gaps to be challenged here. So the next immediate support or resistance for FLR is 2750. Short term may have to come back to 17 before it can go again. Next one is Fossil. Again, a lot of these retail stocks, how they perform will pretty much depend upon how their earnings, how they did in the triple whammy of Thanksgiving sales, Christmas sales, and January sales. So it all depends on how they perform. So at the moment, it looks like Fossil might want to bounce off 7 before it can go again. And then the next resistance is around about 9. General Electric is next. So again, General Electric, we talked about this before last week and last couple of weeks, that it is outside the norm. This will be the normal trading range. That's where it should normally be living. So it's in the fast lane, if you like. And you can see it can easily now pull back to 11. So I think a lot of people have already sold the in the money 11 back here to catch that fall. If it bounces off 11 back up to 1250, would complete that 3 row pattern. But what hasn't gone away is the potential to get back down to around about 10. Even though if it wants to continue an overall upward trend, it would be normal to pull back to support. GPS is another stock that traditionally does very well after the Christmas sales. And again, it's tipping along at a very slight upward angle, and again has the potential to get to 22 when you stand back and take a look at the bigger picture. Next one is Hawaiian Airlines. Let's just clear away the drawings here. Hawaiian Airlines again is an airline stock, and airline stocks are a bit jittery now because of what happened again in Iran and the fact that if oil prices go up, then airline stocks tend to go down. But anyways, if you take a look at Hawaiian, it had already done the 3 rolls down up anyway, and was due to start a downward trend. So you could see it pulling back to previous lows of around about 26, 25 maybe. So the trend for HA is definitely down. It is making lower lows and lower highs. So if you haven't protected your profit, make sure you do so. Hain is next. Again, Hain is that the second roll is getting very dragged out, but it's still in play. There's roll 1, roll 2. Eventually could get to 24 and back up to 28, 29 if it continues in that trend. Next one is Harley Davidson. So Harley Davidson never got to do that second roll, third roll. That's not to say it won't do it eventually. So it needs to find support here around about 34. That's critical. So if it doesn't hold at this level here, it could easily revisit back, go back to 32, back to the previous low. That's what shares do when they go into downtrend. They test the previous low, and if they break down to that, they go back to the one before that. Hewlett Packard, again, it did that big spike up. And just as we said with CRUS, when spike downs happen, they get revisited. And it looks like Hewlett Packard is almost, not quite, but is almost rang the bell here. So probably after doing that, that'll be enough of a uptrend. It'll probably pull back a little bit. Now, this spike was caused by the rumor that Xerox was going to buy it out. Next was HRB, again, a very, very strong company. Again, a company, if you study the value line report carefully, it tends to do all of its sales in the fourth and final quarter and all of its profit get declared in the first quarter. So again, it has the potential to go back up to 26. Next one is Infi. Infi is a very strong company. It's now in a nice little uptrend here. So again, if we take a look at where's the next potential resistance, is around about 12. Yeah, might have to bounce off the 10-day and 20 before it can go again. But eventually, if it can continue the upward momentum, don't be surprised if it gets back up to around about 12. Next one is JBL. Again, very, very top heavy. Wouldn't take much to push JBL back down to 35. JetBlue, another oil airline stock that's going to be influenced by the tensions between Iran and US. But it already has done the 3 rolls down here anyway, so you're back down to support. So you may see it trading back up to around about 21 to continue that uptrend, especially if the tension eases in the Middle East. Juniper, another very strong stock. Again, it has done 2 rolls, and sometimes soon it will do the 3rd roll, back up to around about 27.50. KFY is next. KFY again is a very strong company, recruitment company. A lot of long-term upside in KFY. It has traded as high as 70. There's nothing fundamentally wrong with it. The fundamentals haven't changed. It's in a recovery upward trend. But that being said, it could easily pull back to 40 before it goes again. KHC is back down to support now. If you look at this, again, remember KHC is 26.7% owned by Warren Buffett. So there's roll 1, roll 2 looks something like this, and then roll 3 would take it back up to 35, which again, if you stand back and take a look at the bigger picture, the bottom of the gap, I think, is 35, yeah. So don't be surprised if in the next 2 or 3 months you see KHC, provided there's no major news around earnings or stuff, it could easily get to the bottom of this gap, which is 35. Next one is KR. Again, a very strong retail stock, grocery store, a bit like Walmart. There's roll 1, roll 2, so easy can pull back to 26. So now that you know this, you've got plenty of weakness in the MACD bars to warn you. It's trading at 28.36, so you can sell in the money 26. Again, you can put in a contingent order, contingent upon it going below the 20-day moving average. But if we zoom in and take a close look, maybe it's already told you that it's already gone through the 20-day. Yeah. So there's all your warning signs there that it's going to drop. Look, it's 2 days it's penetrated below the 20-day moving average. So definitely you need to put in your protection now, because you can see easy drop into 26. LB, again, another stock that traditionally does very well in the fourth quarter sales and then the first quarter because of the earnings report. And so you begin to see us making some moves to the upside, and the immediate resistance is this old support here. So you can see it back up 22, maybe pull away and then back up to 25. Depends on how the results do on the next earnings report. Southwest Airlines, another airline stock that again is going to be a bit nervous around the tension in the Middle East. However, it's already done the 3 rolls down, up, sorry, so easily could revisit 50, 51. And it is in underneath the 10 and 20, which is a sign of continuation of a downtrend. Let's see, is there a question from somebody? Stephen says, hi on, will there be Making Money at the Tops webinar this week? Nothing in the list. Yeah, if you just use that link, yeah, it should be. I'll send Breen a what's up, but yeah, there's no reason why it wouldn't go ahead this week. Thanks. All right, next one is Mattel. So Mattel is still an upward trend, but be careful because it is very sitting dangerously now at the top of the third roll. So really, really easy for Mattel to pull back to 1250, and as we know, after 3 rolls up, it may even have to go back to 1150 before it can go again. Next one is MU. Here's another stock that's at the top of the third roll. There's roll 1, roll 2. Could easily pull back to around about 48. So as I was saying to you when I started, there's a lot of stocks that you will see at the top of the third roll. And if you own those stocks, you should definitely protect your profit. MBR did the 3 rolls down, and now it's kind of done 3 rolls up. Again, MBR is dependent upon oil prices. So if it wants to take a breather, it could come back down to here before it can go again. But as long as it sits on top of the 10 and 20, you can stay reasonably bullish on MBR. NCR is moved back in an upward trend. It's making higher highs and higher lows, but you can easily see here when you draw your trend line that it could easily revisit. Let's just go and get a drawing tool here and show you now. It could easily revisit 33 would be very doable. There's your next support for NCR. NEM is next. Again, NEM has begun to show a little bit of weakness. It's done an upward trend. It's done 3 rolls up. It's really, really testing the 10 and 20 now, and could certainly revisit the old support price here and the old resistance price here. So you could see it back down around about 37 in the next 2 to 3 months. You've got weakness in the MACD bars here, upside down V, etc. See, there's somebody else in the chat there. Maybe that was Stephen just. Andrew Kane, if you're online, if you could type in the chat what companies that you're doing on Monday. Okay, so Nokia, we've been telling you for many weeks now that the first thing it's going to do is challenge the bottom of the gap, and that's what it's done. Expected to pull away from the gap now, and then go into the gap, pull away to the bottom of the gap again, and then eventually close the gap. So that's what you can expect from Nokia over the next 2 to 3 months, unless there's no major news to disrupt the pattern. Oasis is another stock that's going to be pretty much dependent upon. Yeah, so Andrew's saying he's planning to do Intel and JBL, INTC and JBL on Monday. Thank you for that, Andrew. So, oops, my mistake. Let's go back to sharing. And let's just take a quick look at Intel, seeing as it'll be discussed on Monday. INTC, I think we skipped over the top of it. Yeah, looking at INTC again, the old story that there's an uptrend here making higher highs and higher lows. And again, you're coming close to the top of a upward trend. Again, it could easily revisit here back to previous lows, or maybe even here as well, depending on how much. And again, you've got plenty of warning here with your upside down V for stochastics and RSI. Thank you for that, Andrew. So where were we? Oasis, we did ODPs next. ODP is continuing the upward trend, but it is at support. It is underneath the 10 and 20-day moving average. So again, it may want to pull back to 2 before it goes again. The next target for ODP is 3. The next thing we'll take a look at is the actual oil prices. Again, you can see that they're in an uptrend. However, they may come to keep an eye on this because obviously it's done 3 rolls up. It could revisit here if things settle down in the Middle East. If they don't, it could trade back up to 760, 750 at least. Next one is ON. ON again, you're getting plenty of warning, guys. Now, if you're sitting on profit in ON, we're telling you up front that there's a strong possibility now it's going to pull back to 22, and then that's the end of the 3 rolls up, and then it might even go back to 21. So make sure you protect your profit. It's real simple. Just put in a contingent order. It's contingent upon it dropping below the low. You're going to sell the in the money call option, collect the fall before it happens. But if it keeps going up and up, happy days. Just keep raising up your target. So you can see here you did the 3 rolls and it dropped as well. Next one is Oracle. Oracle is actually in a downtrend, making lower lows and lower highs. So let's get the drawing tool here and show you. There's roll 1, roll 2. If it wants to continue that, roll 3 would take you back down to these sort of levels here. That's Oracle. Next one is Pets. Again, Pets gapped up on good earnings and then pulled back again. That's usually what happens. It never got to close the gap back down again. It is pretty much trading sideways. And that's what you can expect to trade between 22 and 24. And you can see the indicators are beginning to get bunched in the middle as well, which would support the continuation of a sideways trend. Next one is PWR. Again, another stock that's going to be dependent upon how energy prices go. It's getting stuck here at around about 40, 41. If it does do the 3rd roll, you're looking at back up to 46. Indicators again bunched around the middle, so it may trade a little bit sideways for a little bit longer before it can make its mind up what it wants to do. Skechers is next. Again, big government wealth warning in Skechers. You are definitely the top of the 3rd roll. It's a big, long rolls that took a long time to happen. There's roll 1, there's roll 2, roll 3 is here. Could easily pull back to 34. As long as there's no major news to change the pattern. Silver's looks like it's finished with that downward trend. Looks like it's wants to trade sideways between 1550 and 1750. It seems to be in a bit of a sideways trend now. One more roll would take you between 1550 and 1750. Next one is SNV. SNV again, if you take a look at it, it's under double resistance. Again, you've done 3 mini rolls up here. SNV could easily pull back to 35. Will be doable if it just stays in the current trend it's in. SWN, again, it's making steady progress. Nothing to get excited about, but it has done 3 rolls up. Roll 1, roll 2, roll 3. And again, may have to revisit maybe 180 before it can go again. All depends on oil prices as well. Tech is just trading sideways. Tech looks like it's back down to support now. There's roll 1, roll 2, roll 3. And if it can get back into an upward trend, you can see it get back up to around about 19. Teva is an interesting stock. It's, if you stand back and take a look at the big picture, it's dropped all the way from 70 down to around about 7, took a 90% drop. Interesting enough, Warren Buffett has recently taken a position in it in the Berkshire Hathaway fund, so he obviously knows his business. And there's signs now that it's breaking out of the upward trend, albeit on a day-to-day basis, it's not moving that much. It's just going sideways. So if we go back to a daily chart, you can see for the moment it's just jogging on the spot sideways. So you may see it trading between 9 and maybe 11 for the moment. But the big picture is there's a lot of upside. Okay, next one's Urban. URBN, again, is another very strong stock. It's one of the strongest retail stocks. It gapped down on Friday, so you got to wait for the reverse J. And if it does recover, then you could see it back up around about 30 again. So again, keep an eye on that. You could pick that up nice and handy around about 24, 25. Next one is Vivo. Vivo's begin to trade a little bit sideways now between 950 and 1020. Again, the indicators are around about the middle for stochastics RSI. If it breaks out of that, your next target is 1250. Next one is WAB. Again, we're only interested in this because those of you that own GE, you got WAB shares as free shares. Could easily pull back to 74 before it goes again. Next thing is Walgreens. Again, Walgreens is a very strong 4x4. It's obviously gap down here, and that gives you another opportunity. Again, it may wait for the reverse J, but again, you can pick it up here. Walgreens Boots is a sort of stock that could be up around about $80 in the next 1 to 2 years. So again, it's a slow mover, but it's great value down here at these sort of prices. Doesn't move that fast though. Next one is Winnebago. Again, Winnebago could easily pull back to around about 46. Will be very doable for Winnebago. US Steel is next. So US Steel is back down at previous supports, finished with that uptrend, and is now back down at a strong base at around about 1050. If it can get back in an uptrend, your next target is 13. And then if it can get back into the main lane of traffic, you're talking around about 1650. And the last one is Xerox. Again, Xerox is showing a little bit of weakness. It's in underneath the 10 and 20-day moving average. So again, it is in a downward trend. Could close this gap back down to around about 35 or even as low as 32. Okay, that's all the stocks. So if you've got any questions, type them in the chat. If there's no questions, so if you have any questions, put them in the chat, and if not, we'll see you on the next support session. Remember, we do 4 support sessions a week. Sunday, see the trends. Monday, 2 companies. Andrew's going to be doing Intel and JBL on Monday. Making money at the tops on Tuesday, and bottom fishing on Wednesday. Antoine, I think you've got your hand up there. If you have, I'll pass you the microphone over to you.
Hi, Owen. Can you hear me?
I can hear you perfect, Antoine. Yeah.
Good evening.
Good evening.
I have a 97% profit on Bet Bath and Beyond call.
Yes.
And I was thinking, would it be wise to let it expire and the shares are called away from me at a profit? Is that one viable strategy, or else the second one is like close the position and just wait for the stock to continue go up so that I sell another call eventually?
Yeah. So if you want to give me the specifics, what price did you pay for the stock?
I'm going into the screen. It was 1362.
So you paid 1362, and you sold. What strike price did you sell?
16.
You sold at 16, and it looks like you. And this is a January call that's going to expire next Friday, is it?
Yes. So
Yeah.
I'm 97% and a half up.
Yeah, and it looks like you're probably not going to be called out now, isn't it?
No, not yet, because it expires. Yeah, exactly. I can let it expire then. Because yeah, it's 16 and current price is around 14.50.
Yeah, so there's no way you're going to be called out now with 5 days to go. Is there any earnings? When's the earnings date for Bed Bath & Beyond?
They just passed. They were last Friday, I think.
Okay, so there's going to be no surprises this week. So yeah, it makes perfect sense. There's no point in wasting money and buying back that call. Just let that call naturally expire.
Okay.
And then when the share goes back up to resistance again, sell it again.
Okay.
Well, what did you receive? What did you receive for the call?
I need to check because I don't have it here. 195.
Okay, so you got 195.
Yes.
So that's great. I mean, that's the name of the game. When your shares are high, you sell the call, and if you don't get called out, happy days. You get to keep your stock. You get to continue to get dividends, and you have the asset ready to sell a call option again at the next high point.
Yeah. It's a cool $800. Not bad.
Yeah, well done. Absolutely perfect. Yeah. So yeah, there's no point in wasting money buying back that call. Just let it expire this Friday.
Okay. Yeah, in fact, this week there weren't many opportunities actually to sell puts because a number of them where there were opportunities on earnings were coming up. So I thought it's better to wait a bit rather than plow into earnings because it might move it too much.
Yeah, so if you've got buying power, because we're coming into earnings season, then as and when shares miss their earnings, but there's nothing wrong with the company and they gap down. So it's an opportunity when they settle down for you to use your buying power to sell some puts on stuff that's low again.
Yes. In fact, Urban is on the watch list after I saw your presentation now. Yeah, I didn't notice. Yeah, it gapped down.
Urban's a great company, very strong company, and it's the sort of company, it's been on our watch list for over 10 years now. It hits low points of the low 20s and goes up as high as the mid 40s. So it has the potential to double over the next 12 to 18 months. So
yeah. And it has nice volatility too.
It does. It gives you good premiums. Yes, absolutely.
Yes. Thank you so much, Owen.
You're very welcome, Anton. Thanks for all your help on Malta. Really appreciate it.
Thank you.
Okay, guys. Any more questions? You can do like Antoine, just put up your hand there. We'll pass you the mic. So if there's no questions, or if you don't want to use the mic, you can type them in the text chat and we can pick them up there. So doesn't seem to be any questions. So folks, have a wonderful and profitable week ahead. Remember, we are coming into the third Friday. So shares are going to naturally want to drop in week 3 and week 4 anyway. A lot of the stocks we've showed you there tonight are at resistance at the top of the third roll. And if you don't sell the in the money call now, you're going to just watch them drop anyway. So you may as well collect the fall before it happens, just like Antoine did there. So have a wonderful week, and we'll see you next week.